You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a commodity,
Mm-hmm.
which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments.
Hey guys, welcome to Everyday Finance. Big institutions and wealthy investors finally understand Bitcoin's fixed supply, sparking a massive, mostly silent economic revolution many call the greatest wealth transfer in history. With only 21 million coins in existence and over 19.5 million mined, Bitcoin is becoming scarcer, sparking a frenetic race for the remaining supply. This speculative frenzy is driven by a global awakening to Bitcoin's unique position as a digitally verifiable, decentralized, and finite asset, where every purchase tightens the supply and drives the price higher. More entities wake up and move to secure even a fraction of the supply, evaporating the float and driving prices up. Bitcoin advocate and MicroStrategy executive chairman Michael Saylor leads this digital transformation. MicroStrategy will buy because of his bold, unwavering message. Saylor believes game theory and supply and demand lock in Bitcoin's trajectory. 5% of the supply equals $1 million per coin. That becomes $10 million at 7.5%. At 10%, he predicts $50 million per Bitcoin. Saylor's simple but effective strategy is to make Bitcoin scarcer, more valuable, and harder to get for latecomers with each acquisition. Every buyer in this global contest tightens the supply noose and accelerates a massive wealth revaluation, investment, and a never-ending capital flow from weak assets to the hardest money ever made. Corporations, sovereign wealth funds, and possibly governments following MicroStrategy could cause a historic supply shock in the tight market. As the window to buy even a little digital gold closes, skeptics and observers may be permanently excluded. Saylor predicts a financial singularity where early adopters achieve generational wealth and late adopters fade. Each buyer and conversion increases Bitcoin's gravity. Bitcoin is moving from speculation to a store of value in this bull market. Bitcoin holders may lead a new monetary order after the dust settles, not whether Bitcoin will explode, but how far the rocket will fly after the last coin is traded. Watch the video ahead.
Our business model is to securitize Bitcoin. So we're a Bitcoin treasury company. That means we hold Bitcoin as our primary treasury asset, and we offer securities to investors that they need to give them they slice various risks of performance, volatility, and risk off of Bitcoin. So some people want low risk, low vol, low performance uh, securities, and to them we would sell them a preferred stock like Strife, or convertible preferred like Strike, or a convertible bond, right? The convertible bonds are like 70 delta instruments, and Strike is a 30 delta instrument, and Strife is a 0 delta fixed income instrument. And one of them looks like a 20 vol, and one of them looks like a 40 vol, and one of them looks like a 60 vol. And then when we take the leverage from selling those securities, uh, we feed that back into the equity so that the equity itself ends up being higher vol, higher performance than BTC. So we take, if BTC was a 60-60 type instrument, 60 vol, 60 performance, we aim to create a 90-90 equity, because some people want 90 ARR and 90 vol. and then we aim to give somebody else maybe we want to give someone else the 60 ARR 40 vol, you know, with a
Yeah.
strike or with a convertible thing. And maybe we want to give somebody else the 30 ARR 30 vol type instrument. So we're giving people different tranches of volatility, risk, and return. And then, of course, the equity itself is the building block for a whole host of derivatives. So you can build the entire options market, and there's like a massive, like $70 billion open interest in the options market. And then you can build other ETFs, right? The levered ETFs, the volatility interest generating ETFs, the short ETFs, every other flavor of derivative. And our position is our job is to do what everybody else can't do. So, for example, you can sell, if you're a trader, you can sell covered calls all day long. So I'm not going to do that because you can. What
Mm-hmm.
I'm going to do is create a convertible preferred stock because you can't.
Mm-hmm.
So what we're doing is we're creating those various securities, everything from a pure currency swap, like for example, if I give you 10% interest and you give me back money and I'm generating BTC yield and you're generating USD yield, that's a pure currency swap. I could do that in Canadian, I could do that in yen, I could do that in euros, I can do that in USD. So that's one type of security. And then above it, I can create the convertible, various flavors of some yield, some conversion rate, all the way up to, pure Bitcoin or high octane, high leverage Bitcoin. And for us, we're always going to aim to make the equity like 1.5 to 2x Bitcoin. And I can't, it's not clear to me how I get much beyond that. But then we leave it to the rest of the financial market to concoct 2x to 200x leverage by using all of their option interest, option tools, etc. And at the end of the day, the result is everybody gets the flavor of volatility, the amount of volatility, the amount of performance, the amount of risk that they want in a liquid fashion on a compliant marketplace, right? That's our mission. It's not going to change, right? Everything we're doing, you can do at the scale of $100 billion enterprise or $200 billion enterprise or $400 billion, or $800 billion or 1.6 trillion or 3.2 trillion or 6.4 trillion, right? It's pretty much the same exact structure. You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a commodity.
Mm-hmm.
Which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments.
Bitcoin stands out as the indestructible bedrock of digital finance, a system so fundamentally secure, decentralized, and unyielding that it proves time and time again that simplicity beats complexity when it comes to trust and value. Ethereum and Solana offer developers powerful tools and functionality, but their ecosystems are plagued by technical debt, regulatory risk, and vulnerabilities from their complexity. From Terra's collapse and FTX's implosion to countless altcoin losses, leveraged, centralized, or opaque foundations are fragile. Bitcoin aims to be incorruptible money, not everything else. In that pursuit, it has remained unshakable. Building on steel, not sand, is Michael Saylor's mantra. His only asset, with institutional-grade strength to survive the chaos, is Bitcoin, a digital fortress immune to inflation, government interference, and centralized manipulation. No need to change its protocol in over a decade. Its brutal simplicity is its superpower. No smart contracts, hype cycles, yield farming, or governance tokens, just digital scarcity, growing more valuable with every altcoin failure. Layer 2 projects and other blockchain experiments fail under their own weight or regulatory pressure, but Bitcoin continues. Serious investors and builders should focus on the one crypto asset that will last rather than fragile, flashy altcoins chasing complexity and hype. Although most digital assets collapse at the first sign of stress, Bitcoin thrives. It thrives on volatility and pressure. The digital equivalent of an indestructible foundation, it strengthens as others fail. The real profits, security, and future of decentralized value lie in stacking Bitcoin and securing it in cold storage, immune to unstable systems. Not everything is promised by Bitcoin. It promises to store value in a way that no one can debase or control better than anything else. That's the most useful in a shady market. When all else fails, Bitcoin delivers. Watch more.
Well, I can't let your previous comment go unchallenged. Uh, I'm showing you how to build a 100-story building using steel, which is Bitcoin, a digital scarcity. To
Mhm.
equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel.
Yeah.
And yeah, you can also lever them, but you can lever balsa wood, but levering, you can build lots of things that are steel containers and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float. And then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up. And then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are, they may not be securities, but they're definitely tokens. And as
Mhm.
tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle and lots of people are going to die and it's going to be catastrophe and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage and this, and what I'm doing is not an intelligent or a brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect,
Mhm.
right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe.
Bitcoin has maintained support above $81,000, despite resistance near $88,000 during a crucial market cycle. Price consolidation is occurring amid global turmoil, particularly rising US-China tensions that have shaken traditional financial markets. Despite this uncertainty, Bitcoin's stability shows its growing role as a reliable alternative asset. Under the surface, the cryptocurrency market is showing signs of renewed momentum, especially in futures. Institutional long positions are rising due to open interest and funding rate optimism. Combined with rising aggressive taker volume, meaning buyers are confident, these signals suggest quiet accumulation as prices consolidate. Michael Saylor has long viewed Bitcoin as a hedge against macroeconomic instability and a better store of value than fiat currencies or traditional assets. Bitcoin's 200-day exponential moving average, a key benchmark for institutional traders, may launch the next upward move. A breakdown below the $81,000 support level could lead to further downside, while a breakout above $88,000 could start the next bull market leg. As global markets digest trade wars, changing interest rate policies, and inflationary pressures, Bitcoin's stability is closely watched. Its resilience makes it a digital safe haven and hard money asset that attracts individual and institutional investors. Futures market structure, on-chain health, and macro context suggest a major move, either as a launchpad for price appreciation or a final holding pattern before a deeper correction. Bitcoin's centrality in the digital financial landscape remains unaffected by short-term trends. The fact that it can withstand external pressures and attract investors shows its foundational strength and long-term relevance. Bitcoin is watched not only for price action, but also for its impact on money in a world of economic uncertainty and digital transformation. Thanks for watching.